It's a top that trade day. Joining us right now, Knuckman, a pro trader and chief market strategist at bullseyeoption.com, along with Flynn, a Fox Business Network news contributor, here for our trader game. Round number one. 2-time. Is the dollar done? Such as a Canadian toonie, which is like a $2 bill. Pick a play now. The US dollar for more power or a Canadian currency?
The dollar power continues because it looks like, obviously, there's still more rate hikes in the future. I thought this was going to fall at some point. Not just yet. Looking at the Canadian dollar, for the last 20 years, it's had super support at 70. We're about 73, 74 right now. So I like that level to lean on. That's also the low from 2020 COVID.
That answer is about as phony as a $2 bill. No, I'm just kidding. I remember when they brought the $2 bill in. I mean, it used to be $2 bills, you don't want them. But of course, then they brought it in. And the reason why they brought it in was what Alan was saying, inflation, right? But the funny thing is that when they created the $2 bill, inflation started to go away. So maybe to end inflation, we just need to print more $2 bills. But you're absolutely right. The purchasing power of the dollar is down. That's why the Federal Reserve has to be very aggressive. And all of a sudden, the dollar is showing a lot of strength, right? I guess you don't want to fight the Fed. Interestingly enough, of course, Japan's very upset. They intervened in their currency because they felt the dollar was too strong against theirs. But make no mistake about it, as long as the Fed raises interest rates, I take the U.S. dollar over the Canadian.
Round number two, not just us, as in U.S. Pork prices in China and beans in Brazil have boomed. What food futures can fly next?
I think right now, I mean, if you look at the meat complex, there's going to be a lot of challenges, right? There's a lot of geopolitical risks because of the Russian-Ukraine war, supply tightness around the globe. Now, one of the charts I'm looking at is the wheat chart right now. And it looks like if this wheat ever breaks out of this rounding saucer-like bottom channel, that we could see the price of wheat actually double or triple or hit all-time highs. So it looks very, very scary. That doesn't mean it's going to happen, but there's a real possibility if there's any disruption in supply. Another chart that looks kind of interesting long-term is February cattle. I'm talking about the winter month cattle. Right now, of course, because of inflation, feed costs are high. We've been calling the herd. But come next winter, the supplies of beef are going to be really tight. So we think long-term February cattle could be a very good play on your futures market.
I'm going too old school. First of all, it used to be a thing to follow orange juice in hurricane season, but now a lot of the crop is Brazil and so forth. But orange juice, for my whole life, in about 50 years of trading here, has been traded roughly between $1 and $2. $1 and $2. For the breakouts, we could see $3. We're up at the top of that range right now. I don't know what would cause it. And again, there's not a huge amount of volume in orange juice. My second one is rough rice. I remember not knowing where the rough rice pit was on the grain floor for years. And in the 2000s, it did rally from 5 up to 25. Right now, we're sitting near the 17 level or so. Mostly it's been between 10 and 20. A breakout of that 20 sends it to 30. So there are a lot of commodities in play because it's pure supply and demand, and anything can be disruptive and give these things a price pop.
And you can buy some soybeans to put some soy sauce on your rough rice.
Round number three, 80% off sale. Big billionaire buyers are finding some bargains looking at names such as Rivian, Palantir, and Upstart. What do you think? Pick your play.
Well, the Rivian truck is, how shall I say, unpleasant to look at, but the stock is doing pretty well. It's been between 20 and 40, and right now it's here at that midpoint around the 30 level to lean on. Upstart, it's got a big gap above. This is a stock that was at $400. It bottomed out at 20, but it's now trading between 20 and 50, so there's something there. And the last one is cheaper. The PLTR was $12 just a couple of weeks ago after making a bottom at 8. So, all of these have risk reward on your side, but they can always go low.
When you get a situation where you see stocks have a substantial drop, usually there's something wrong. And at least 2 out of 3 of those stocks, probably something is wrong and they're probably not going to bounce back. So my recommendation is, if you want to gamble on that, buy all 3, because I don't know which one's going to come back out of those 3, right? And one of them, after they've been beat up, more than likely is going to give you the percentage return to make up for the risk on the other 2.
Here's your bonus round question for today. A co-founder from Google is winding down his startup. What was that startup? Creating flying cars, flying trucks, or flying pigs?
It's got to be flying cars, because everybody from the Jetsons said we should have had one by now. So it's flying cars.
I actually saw some of these flying cars were ordered by one of the airlines, but I do think one of the startups did shut down.
Great job. You guys are on fire. Both of you are right. Nice to hear that applause. Go to businessfirstam.com for where to see our show on TV.